and that's when the next structure break takes place. If we don't go below that price, this price hasn't moved out the prior structure. Still inside market at the present moment, still inside the market. And obviously if the value changes to buying bottom edges, we can be more aggressive in our structure breaks on the buy side. Does that make sense to everybody? So you can see how this could have played out for you if you traded the structures. There's no top edge fades. There's no attempts to top edge fade, but there was plenty of very, very good sells to keep yourself very happy with the outcomes. And there was obviously no attempt to buy a bottom edge, but there was a structure break that gave us a buy on a pullback. Very, very nice trade as well. And you can see that these aren't chump change trades. And there's the structure break. There it is. You've got your structure break. And obviously it's taken you to the target price of that original bracket there. And obviously you're going to be expecting a buy response to that. But now that you've got the structure break, you can now use that structure break and say to yourself, right, I've got a structure break. I've got a low price now in place. I can now use that structure break from there to now put in my pullback trades into the box here. Now, obviously, that's all dependent upon whether you're still bearish. If you become bullish, guess what you do? So, for example, here, I can see that on this first pullback trade, what happened? On this first pullback trade, the value started to decline. So what are you going to do at this structural level? You're going to pull away that offer, aren't you? Pull away the offer, right? You come up to the next structural trade level here, and you start looking for a possible sell again, and you ask the question, have I got any value to sell it? And you start comparing this price with this price. So you start drawing in some value lines, and you see whether the value is higher. If the value is higher, guess what you do here? Sell it. So obviously all you do is you then pick up that sell, and that sell actually did okay. Not on the way up, one tick on the way back down again. And you can see that you've retested back into the lows for a very nice little bit of profit as the value flips. You obviously would be able to use that flip on value as a nice excuse to bag and tag some nice monies. Now this is still the same structure, guys. It's still exactly the same, so that level doesn't go away. So when the price retests, would you resell into this 46 3/4? Well, the answer to that question is yes. Why? Well, because you can see that value is going up, so therefore the price should be going down back into prior swing lows, and therefore you should be reselling 6 3/4, right? You should be reselling that, no problem. And obviously, if you've just taken a little sell into that 6 3/4 here or here, you've just been able to break structure lows there. And obviously the challenge now is, are you still bearish? The answer is yes. Okay, so if you're still bearish, you're now going to do a new target price. So there's the high, there's the low price there. You've now got a new target price for this sell side structure. And that's obviously going to take you down into a price area here. And obviously based on that, you've now got your new pullback trade areas that you're going to be mindful of here. And again, here. And there's your target price just been achieved. And here. And there's your new structures. Your new target price has just been achieved. A brilliant little sell trade. Fantastic bit of structure selling in line with value. Now the value is collapsing here. So obviously you've got to be aware of the fact that the value is now collapsing. That looks pretty good effort from that structural short sell. Correct? Correct. Now if the price breaks structure lows again, we're back in again. You understand? The price now breaks new structure lows, we're back in again with a brand new set of instructions for the algorithms. This is what algorithmic trading looks like. This is what algorithmic trading feels like. Is it useful? Is it good? Well, you make that decision for yourself. These are all systematic trade entries that you could have had yourself simply by putting some lines on the charts, by looking for backfill type trades, looking for the move, making sure you're in line with structure, getting a nice pullback into a key reference level, and then dealing on the sell side. So if you're happy, when it comes back up to these structural levels here, you sell it. If you don't like it, you pull away that level and you move to the next level. If you don't like the next level, you move to the next level. If you don't like the next level, you move to the next level. If you don't like the next level, you're probably changing to a buy side structure and you're just going to let it go through, right? So you just pull away the offer, you pull away the offer, you pull away the offer, you pull away the offer, the market breaks north, you're in a bid. You start buying dips, you start buying structural pullbacks. Make sense? and you just measure the value against the previous, because everything's levels here. Everything's about getting structural levels. So when you see these structural levels, everything you do is about finding value, and you're always going to be able to ask the question, when the price traded back to this level, did I have any structural value to resell it? So when we come back into that level, one of the things you started to recognize was that the short-term structure was actually suggesting at that stage that this price was still a reasonable sell, and that actually made some money. So you'd have been able to sell that break south again out of this level, and it wasn't the biggest sell in the world, but it went 42s to 39.75, still $100. So when the price retests into this, it still looks like a reasonable sell through that phase. I don't know if you agree, disagree, doesn't make any difference. I still think it looked reasonable for a sell again. Now, on this occasion, it was a scratch. You never made any money. And obviously, at that stage there, you can see that at this point, the value collapses. And what you're going to do then is you're going to pull away this bid. You're not going to take the trade there because now you're actually getting lower lows in terms of your value. So you're going to pull away that bid. You're going to pull away this bid. And you're going to start looking at this bid here. Now, why would you look at that bid? Well, because if we look in the background, the last time price traded here, the value traded here. And at that price there, if you look at the current value in that pullback, you can see the value is actually slightly bearish on that offer. So there is an opportunity for me to take one last swing at the sell side business here and obviously start looking at that as a last ditch attempt at holding the market offered. And obviously the idea is to stay below this price. So when it makes some money and then you take some profits and you scratch out, you're asking the question again. But I like the way that the value is developing on the bear side. So you can go again a second time. So you make some money, you take a +1. Price goes back below that level, you make some money, you take a +1. You try it again if the value is still improving. You try it again so long as the value keeps improving. You try it again so long as the value keeps improving. And you're now sell side, but you're still inside the structural sell. Now that's obviously popped the value. You've taken a +1, it's taken out the high, a little bit disappointing, but obviously if you still like the value in the sell, you can leave that sell offer still in place at the bottom edges, but obviously your structure has now effectively broken. If your structure breaks, you don't have to second guess it. You're only buy side only now. So what are you going to do? You're now going to build a series of bids into this structure. And you're obviously going to start moving your structural narratives. You're now going to be looking at the break price. You're going to be looking at this first pullback price, the second pullback price, and the third pullback price. So these become your bids. These become your 4 bid prices here, okay? So that's it. That's all you're ever going to do. So when the price then tests the bid and goes bid, well, you don't have a choice. You're now in a buy-side structure. Your now algorithms have flipped into a buy-side structure. So now it's a buy trade. And obviously based on that buy trade, you can already recognize that your target prices are on your screens. Your main target price is up here. It's now on the screen. And you are buy side only based on structural breaks. Is that really obvious? I think it is. And obviously the idea now is that you simply run the momentum. If the market breaks and you see some inside structures again, so for example, if you see that as a sell coming in there, if the market breaks, you can start running a brand new higher structure. You can start running it as a brand new higher structure. If the price pulls all the way back to this, you can guarantee there's a seller in here. So a break of that seller would obviously open the door to a big upside move. That's why you trade this way as a momentum trader. So you can see how this momentum trade plays out based simply watching the structures. You can see that the chart is dominated by these little measures and pullback bracket areas. It's literally teeming with the damn things. So you can see all the buys, the change of structure for a sell, the change of structure back to a buy, the change of structure for a sell, and then a big ripping sell. There's no buys at lows. There's no sells at highs. It's all change of structure sells. It's all change of structure buys. And therefore, that's why there's a buy in here, which has already made some nice money. You can see what happened here. The change of structure again. We have just taken out that prior high for a nice target for the buyers. And obviously, based on that, you can obviously, if you want to, if you're happy with the value, you can now bring the value up here. And you can now use that as a change of structure. And if it breaks south, that's the change of structure in, okay? If it breaks south and you're happy that it's broken south, if your value suggests that you're sell side only, which I don't agree with, in any way, shape or form. I think this looks still very, very bullish. So obviously I'm not going to be the guy that sells the breakout trade, but it doesn't mean you can't sell the pullback trade. You know, so obviously if you don't like selling breakout type trades, I get it. You can obviously wait for the pullback, and the pullback is simply just drawing in the structure and then drawing in the lines. So there would have been a sell trade at that price, there would have been a sell trade at this price, and there would be a sell trade at this price. You don't have to have sells in all of them. What I'm saying is that every time it hits one of these lines, you make a decision, you make a decision, you make a decision. You're either selling the pullback or pulling the pullback, selling the pullback or pulling the pullback, selling the pullback or pulling the pullback. And if you decide to pull it, fair enough. If you decide to keep the pullback in place, then of course the sell comes in as it drops and you make a nice little bottom edge target, and it started the process. If you still like the sell for whatever reason, if you still like the sell for whatever reason, your next sell would have been in there, because that would have been the next key structure just against that target. So there would have been your level there, and you've managed to make a nice reasonable sell side profit. Your next sell would obviously be in here, and that's how you're working this trade. The target price, as you know, down here, and that's obviously another target price, and obviously you've got a new structure, bottom edges here if you're still bearish, this market.